Hello friends, we'll continue with cash flow statement, right? In the cash flow statement, we have been discussing about cash flow from operating activities, right? We're doing cash flow from operating activities. Clear? In this, what we have is first the net profit before taxes and extraordinary items. Clear? Then second, non-cash and non-operating items, right? Then third we have is working capital changes. These are the major three categories when we are doing cash flow from operating activities. Net profit before taxes and extraordinary items. Second is non-cash and non-operating items. Third is working capital changes. So whenever you get a question in exam, first of all, identify the items which will fall in the first, second and third category. That which item is directly related to net profits, like proposed dividend, interim dividend, provision for taxation, extraordinary items, right? So first of all, the first thing while attempting a question, right, see which item is related to net profit, which will be attempted in the net profit, and which will be adjusted in non-cash and non-operating items, which will be adjusted in working capital changes. First of all, identify those items, right? That will make doing your question very easy. Okay, so we have discussed all these things. Now in this lecture we'll do a practical problem on this, right? We'll practice some problems relating to cash flow from operating activities. See, says calculate cash flow from operating activities from the following details. We are given the balances as at 31st March 2015 and 31st March 2016, right? He says surplus, earlier it was 2 lakhs, now it is 3 lakhs. Bills receivable, depreciation, outstanding rent, prepaid insurance, goodwill and inventories, that is stock. Now the first step is calculation of net profit before taxes and extraordinary items. For that we have surplus, right? So how much surplus is earned during the year, we have to see that. Let's start step by step, right? Cash flow statement, right? Here you will write cash flow from operating activities. Clear? The first step is we have surplus. Now to calculate how much surplus is earned during the year, what we are going to do is closing amount of surplus. Closing amount of surplus. What is the closing amount of surplus? 3 lakhs, right? 3 lakhs. minus opening amount of surplus, that is 2 lakhs, right? So 1 lakh is 1 lakh, you can write it here also, no issues. Okay, so 1 lakh is what? It is a net profit. Now, is this net profit before taxes or after taxes? See, is there any adjustment given regarding the items which are directly related to the net profits? Bills receivable? No. Depreciation? No. Outstanding rent? No. Prepaid insurance? No. Goodwill? No. Inventories? No. So that means whatever surplus we are given is, that is net profit before taxes and extraordinary items. That's why I'm saying that first of all identify the items in the question, that which are to fall in which category, whether related to net profits, right, whether related to these working capital changes, whether related to non-cash non-operating items, right? So the first step should be to identify the items under the 3 steps, right? So now we have got the net profit before taxes and extraordinary items. Now what we are going to do is, next we will say adjustment of non-cash and non-operating items. Now see the question and tell me which are the non-cash and the non-operating items. Can you tell me the non-cash and non-operating items? Bills receivable. Is it a non-cash non-operating item? No sir, it is a current asset. Clear? Then depreciation. What about depreciation? Earlier the depreciation was 3 lakh, now the depreciation is 3,20,000. That means during the year you have created a depreciation of 20,000. Now, does depreciation include the actual cash outflow? Can you tell me? This depreciation is a non-cash item. Remember, while discussing also, I told you depreciation does not involve any cash outflow. It is just we are adjusting the values of the assets. It is just a book entry. Now, while preparing the profit and loss account, we must have subtracted this depreciation. Clear? Now, if we have subtracted it, we will add back. I'll say depreciation, right? How much? 20,000. Next, outstanding rent, no, because it is a liability. Prepaid insurance, no, it is a current asset. Goodwill, yes, right? Earlier the goodwill was 2 lakh, now it is 1,60,000. What does this mean? This means we have written off goodwill to the extent of 40,000. So it is our expense because we are writing off the things. We must have subtracted it in profit and loss account. Now we will add back 40,000. Clear? Anything else? No. Now what we will get is 1,60,000. That will be operating profit. Operating profit before working capital changes. Clear? This will be operating profit before working capital changes. So the next step will be working capital changes. Right? What is to be added? Now, I told you that in case of working capital changes, the current assets move in opposite direction and the current liabilities move in the same direction. That means if there is an increase in the value of a current asset, it will be subtracted. Increase is subtracted. If there is a decrease in the value, it will be added back. So the current assets are moving in the opposite direction and the current liabilities are moving in the same direction. So let's see how to treat this. Bills receivable, it is a current asset for us. Earlier it was 1,40,000, now it is 1,80,000. There is an increase in the value of a current asset. Now what to do? Current assets move in opposite direction. Increase in value will be subtracted. Okay. So I'll leave some space here. I'll say bills receivable. Right? How much is the bills receivable? To the extent of 40,000. Clear? Next, depreciation we have treated. Outstanding rent. This is our current liability. Now, if it is our current liability, it has increased from 16,000 to 40,000. There is an increase of 24,000. Now I told you the current liabilities move in the same direction. If there is an increase in the current liability, that means we have borrowed more amount, that is, it is a cash inflow. We will add back. What is it is? Outstanding rent to the extent of 24,000 is the amount. Clear? Next, prepaid insurance. Prepaid insurance is your current asset. Right? Prepaid insurance is your current asset. It has decreased from 14,000 to 12,000. Decrease in current asset. How to treat that? The current assets move in opposite directions. Decrease in current asset means we will add it back. So I will say prepaid insurance, that will be 2,000. Clear? Next, goodwill we have treated. Stock is again your current asset. Your current asset has increased from 1,40,000 to 1,80,000. Now what to do that? Your current assets have increased from 1,40,000 to 1,80,000. How you are going to treat that? Increase in current assets. We will subtract because current assets move in opposite direction. So I will say inventories will be again 40,000. Clear? So this comes to 1,06,000. Now, do you have any information regarding the taxes or anything? No. So that means this is our cash flow from operating activities. This is our cash flow from operating activities. Clear? So friends, the first step should be to identify the items, which items will fall under the net profit, which items will fall under non-cash and non-operating items, and which are the working capital changes. Current assets, current liabilities, you all know that will be done in working capital changes. Clear? So we are starting with just the simple concepts, very simple problems, right? It was one of the simplest problems of cash flow, right? It's just that you should be clear about which items are to be included in the non-cash, non-operating items, which items are to be dealt with in net profits, and which items are to be dealt with in working capital changes. Clear? I hope this problem is clear to all of you. Right? So this is our cash flow from operating activities. Let's do one more problem. Says compute the cash flow from operating activities from the following information. Net profit after provision for tax and proposed dividend is 1,10,000. It is very much clear that we are given net profit after tax and dividend. What is the provision for tax for current year is 50,000. Proposed dividend of 50,000. Depreciation 20,000, loss on sale of plant 10,000, goodwill amortized 40,000, gain on sale of land 40,000, income tax paid 50,000, income tax refund 40,000. So what we have to find out is net profits. What we have to find out is net profit before taxes and extraordinary items. Clear? Shall we start? Let's see. Cash flow statement. Right? In this, we will do cash flow from operating activities. Clear? Now what we are given is net profit after taxes and extraordinary items. Clear? How much is the amount of net profit? It is 1,10,000. Now see the items which are related to the net profit, because here we are clearly given the net profits after taxes. Right? Provision for taxation, it belongs to current year 50,000. It is just a provision, it does not involve the actual cash outflow. So we will add back the provision for taxation. Similarly, proposed dividend. Dividend has been proposed and it is not yet paid. It is proposed for next period. Right? It will be the actual cash outflow when it will be paid. Right now, it is just proposed. So we will add back provision for taxation 50,000. We will add back proposed dividend because these two items directly relate to the net profits, right? So I will say add back provision for taxation. The amount is 50,000. Then proposed dividend of 50,000. Right? Now, next item. Depreciation not related to profits, loss not related, goodwill not related, gain on sale of land not related, income tax paid. What to do with income tax paid? Friends, this income tax paid is related to the previous year. It is not to be added in net profits before taxes. Only the provision for tax this year will be added back. Right? Income tax we will subtract when we calculate the cash flow from operations. Income tax refund. Yes, income tax refund of the previous years we have to adjust because it is not related to the routine operations of the business. Income tax refund. How much? 40,000. So what is the net profit? So now what we get is net profit before taxes, and there are no extraordinary items. Okay, extraordinary items. What is the amount of profit? This comes to 1,70,000. Clear? So the first step we have completed is net profit before taxes and extraordinary items. Identify the items which will be treated in net profit, which are directly related to net profit. We have done the adjustment for that. What is the next step? Adjustment of non-cash and non-operating items. Clear? Adjustment of non-cash and non-operating items. Now tell me, we have done net profit, we have taken provision for taxation, proposed dividend. Depreciation for the year is 2,000, right? So depreciation is a non-cash item because it does not involve the actual cash outflow. Depreciation, it is 20,000. Next, loss on sale of plant. Where we are going to treat this loss on sale of plant? We have discussed this in the previous lectures. Is sale of plant a routine activity of the business? No. Then the loss on sale of plant is not a routine activity for the business. So it will be treated under the non-cash and non-operating items. The loss would have been subtracted in the profit and loss account, debited. Now we will add back. Loss on sale of plant, this comes to 10,000. Clear? Next is goodwill amortization, 40,000. That means we have written off goodwill in the profit and loss account. We will show this on the debit side, but it is a non-cash item because it does not involve any cash outflow. It is just that we are reducing the value of our assets in the books. Next, gain on sale of land. What is gain on sale of land? Is sale of land a routine operation of the business? No. Then any income from the activity which is not an operating activity will not be covered here, right? So we will subtract gain on sale of land. Clear? How much is the gain? Let's see. It is 40,000. Right? So what is the amount that you get? This comes to 2 lakh. Now, what is this? Profit from, I will say operating profit. Operating profit before working capital changes. Right? Then the next step is working capital changes. Are there any current assets or current liabilities given in the question? See, any current assets or current liabilities? No, sir. So there will be no working capital changes. That means this is cash flow from operations. Cash flow from operations before taxes. Clear? Now, what is the next step? Next step is to pay income tax. What is the amount of income tax paid? Income tax paid net of refund. Right? What is the amount of income tax paid? 50,000. What is the refund? 40,000. So what is the actual tax paid is 10,000 only. Clear? So this 1,90,000 is our cash flow. We do not have any extraordinary items. So this 1,90,000 is our cash flow from operating activities. Clear, friends? So I will again say that whenever you get a question on this, first of all, identify the items under net profits which are to be adjusted in the net profits. Then identify the items which are to be adjusted in non-cash and non-operating items. Then identify the items which are related to the working capital changes, that is current assets and current liabilities. Right? And be careful with income tax paid. If they say, if it is given provision for income tax also and income tax paid also, while dealing with the net profits, we have to add back only provision for taxation for this year. Right? Okay. Income tax paid, its provision would have been created last year. Now the income tax is paid. Right? So this is not income tax paid will be subtracted net of refund at the end of cash flow from operations. But while dealing with the net profit, while calculating net profit before taxes, we have to only consider provision for taxation. Clear? I hope this much is clear to you. These are the very simple problems that we have discussed. Right? So you can write this down. If you have any queries, friends, you can always email me at ksjteaching@gmail.com. Okay? So in the next lecture, we'll continue with some more practical problems. Right? We'll continue with some more practical problems on cash flow from operating activities. Clear, friends? That's all for this lecture, friends. Thank you so much.